Hey traders, looking at Tesla's reaction is hilarious. So, if you don't know, I'm in a I run a live room with about 280 to 320, sometimes up to 400 members who are logged in live all day. The room is open all day. They pop in and out. So anyway, out of the 9 hours and a half, probably 9 hours 40 minutes today, we watch the earnings afterwards. But before that, we try to guess which way the market will take the earnings reaction. So I want to remind you that the reaction to the earnings has very little to do with the actual fundamentals. For some reason, Wall Street is obsessed with estimates, and so they react to emotions and expectations. For example, if you look at the results, the P&L, the actual sales and costs and profits and margins and all of that, there's nothing bad in the Tesla report, that flagrant bad to cause it to shockingly drop. It's all about expectations. But what we did is looked at the options, how they're lined up, and it was easier for it to rally. So when it dropped, the reaction down, it was still down here. I said if I was trading Tesla after hours, I would buy the shares right here, right now. And then it did this. So if they did that, they just made 8 to 12, $13, whatever it is. And I said I would do it as a trade. Now, I said I wouldn't add to my stock if I was already long, because there was nothing new that would tell me that I should be adding. So I looked at the P&L. If you're interested with the actuals, this is a growth company. We can all agree on that, correct? Before I forget, if you like this video, give it a like, comment, let's debate it, give me your opinion, just keep it clean. Also subscribe to the channel if you don't already. So the fundamentals, you have to treat it. Not every company you take the same measuring stick. And it kills me when Wall Street's headlines all start with earnings per share, EPS estimates. Who gives a shit what the EPS estimate is? Earnings per share. This is a growth company. What matters is growth. That comes from sales. Yes, sometimes you have to overspend to get the sales. Just look at Amazon. Okay, look at Tesla. Look at CRM. Look at Twilio. You spend a lot to grow a lot. And these companies I mentioned make their own money. They don't borrow to grow anymore. This one used to, doesn't anymore. They create, these guys are healthier than GM and Ford. If you want to debate that point, I can prove it to you. Maybe I'll do a special video on that one. But the point is, if you reacted to the headline, they missed earnings per share. I don't know if they did. I bet you that's the headline. Let's go read. Where is it? That's not it. That's not it. This should be it. No headlines here? Okay, whatever. So if you read the headline, it will probably say something earnings per share. That's the wrong metric. Focus on sales. How did they do in sales? So that's my concern. So I looked at the quarter that they just reported, and I looked at the quarter last year. So they grew something like 29%, let's say 26 or 7%, in the high 20s. And last year they grew 2 bips more, so 30%. Last year, this quarter, they grew 30%. So 29 sucks? No, and it's not a sequential decline also big time. So yes, it's a little bit less than last year, but it's still kicking ass, okay, as far as growth is concerned. So there's no alert on the growth. We can all agree on that. A little bit lower than last year, this quarter, but not alarmingly low. It's still super strong. I can remember at least 15 incidents like this in the last 10 years where Amazon just gets shellacked because it grew less fast. I remember people being disappointed it only grew 30% because it used to grow 50%. Like, how ridiculous is that? Anyway. And then I looked at the profit margin. So is the gross margin shrinking? No, there's no evidence of that. There's a little bit of drop, again, but these are extraordinary circumstances. So the losses are probably due to the high dollar and whatever currencies they have to deal with. If you're selling American goods in American dollars and the dollar has never been stronger, it makes it more difficult to peddle your shit, right? What is it with the cussing? So this is what the Tesla reaction is like. It's completely emotional based on expectations. So if somebody's completely disappointed, I mean, you don't have to be happy with it, but there's no complete disappointment. Like this candle here is just bizarre. Like as if they royally messed up something. It's just pure emotions. So this is just, again, proof that the reaction is not based on actuals. It's based on somebody's opinion of the expectations. So it's a disappointment in somebody expecting this and they got something that's not this and they're throwing a hissy fit about it. It's not a tradable event. It's not going to make me believe that Tesla is less valuable than 2 days ago when we didn't know that information. The statement on Tesla, very simple. It's growing very fast. Argue with that. It's still very profitable from a car perspective. Argue with that. So since, let's see, this has been 6 minutes. Okay, we can do it quickly. How can I prove to you that it is more valuable than GM and Ford? Because this is Tesla's financials. Let's go to the annual. They run 50 last year. Let's use last year or this year, TTM, trailing 12 months, 67 billion in sales. By the way, look how impressive that is. 67 billion in sales, right? Gross profit 18, 67, 18. Remember those numbers. Let's go to Ford. Out of 67 billion in sales, they did 18 in gross profit. 148. 148. How much is that relative to 67? Right? 18. Okay, let's go to GM. So they had double the sales and they could only muster 18 billion, where Tesla with half the sales did 18 billion. 132. How much is that relative to 60 whatever? I already forgot it. Where is it here? 16, 17. It's even sucks worse. So GM and Ford need to learn how to be more efficient. I'm not saying that they're bad companies. I've been long those companies at different times. So this is a statement pro Tesla, not anti the other ones. And I am not a rah-rah fan of Tesla. Trust me. If you go back, I was the troll against Tesla, but the P&L proves me differently now. And I forgot to mention this most important part. In a rising rate environment, companies cannot borrow money easily, right? Look how much cash it generates on its own. Last year, almost 12 billion in cash from its own operations. Now it's still 2 to 4 billion per quarter cash from operations. Okay. Debt to assets dropping. Profit margins rising. What are they upset about again? I forget. Anyway, just do your own homework. Don't sell a stock or don't panic out of your long position because somebody's estimates were whacked out.